So, like we said before, this is definitely one of those type of meetings that we're trying to understand, like what rules that we have with our plans, and are we adhering to them, right? And are we taking notes? Because I believe that even though that we might talk about the stock market and we might go over some of these stocks that have been going up, like they just continue to go up day after day. You might get one pullback or two pullbacks out of the week, but majority of the week, the stocks are going up. So when a stock is going up versus when a stock is going down, when the stock market actually opens, and having the rules based on that will help us identify, the most profitable setups, most profitable trades. And this upcoming week, we're going to have some earnings finally. So with these earnings, there's going to be some banks, there's going to be some a couple of airliners, but mainly I saw mainly banks. But also in the news, we got to remember that there's a lot of flight aviation that's happening, especially with Virgin Galactic, right? So so those are probably one of the two main things, right? Because we still think of Delta, Southwest, Boeing as flights, commercial flights, but Virgin Galactic is trying to get into that same type of space. So Virgin Galactic might actually have some type of influence on the rest of the airliners for the upcoming weeks. So in order to be prepared for that, I guess I would like to go over some of our trades, but I'll also like to go over some fine tuning with note taking and rules, right? Because those two are very, very important. So I know that I have up here, we're going to review our last week trades and what the major economic news are in the earnings preview. But I think this is probably better suited that we kind of just hone in on some of the things that we write down as actual notes when we are taking a trade, right? So as I pull up, I want to pull up I remember I posted it on Instagram and realized that I didn't put it in the PowerPoint. Excuse me. But there are ways of note taking. People have various ways, various ideas on how to really capture the notes on on whatever it is that they're trading. So if you're trading whatever it is, it doesn't matter. If you're trading something and you recognize that, hey, this stock actually has some type of potential, then you write down what it is, what that potential could be, right? Because it could be anything. It literally could be anything. It could be that the stock, when I bought in, the stock was below the 200 SMA price, and then once the middle of the day started to come, the stock started to go up, and because it started to go back up, it started to trade towards the 200 SMA price and started trading above the 200 SMA price, and then started to go up higher. Um, that is just like one little note that that at least I tend to think about when I'm writing any type of notes that dealing with any of these stocks. I'm actually looking for I'm actually looking for a PDF that I can be able to show you so you'll know what I'm talking about when it comes to preparing yourself for the market. If I can find prepared notes, because I remember seeing it. My mentor has it. My mentor, um, uh, Tim Sykes, sorry, he has it, and this is something that he came up with, where it's called Prepare Sucks, where it's called Prepare, and in Prepare, what he talks about is that you're it's an acronym for preparation, obviously, right? So you're looking at the price, and you're looking at the time, you're looking at the your entry, um, you're looking at a couple of things that vary throughout the day, and every time when they vary, it changes your perception of the market, or changes the perception of your entry. Because a lot of times it won't be the same all the way. Why I can't? Okay, I can't find it. Let me go. I know it's on my phone, so let me get it off my phone. Give me 1 second. Prepare. I will send this to me, and then that way we'll all have it. Actually, yeah. Sorry for the delay. Give me a second. All right. So let me pull this up because I know, like, typically I go through all the technicals, and I think that we understand the technicals. Now it's just like little micro things, like note taking. Note taking is so hard. Particularly if you lost on a trade, right? It becomes even harder. You're just like, oh my God, I lost. I don't even want to think about it. But that's where you should really think about it. You should take that opportunity to figure out, well, what happened? What did what was the cause? And we will go over one trade that I made that I knew it was a bad trade when I got in, but I still traded it. Um, and I can pinpoint where I messed up. I want you to see where I messed up. That way that you can at least be able to write notes on that and be like, okay, well, this is how he messed up. So I'm going to show you this photo. Yeah, hopefully you can see it. It's called Prepare, right? And this is where success, meets opportunity. It's when you're prepared. And essentially, what Tim Sykes did was he said, he created a scale, and in this scale, it scaled up to 100 points. So we have this, you know, the pattern, price, risk, reward, entry, exit, past performance, agenda, time. When he means by agenda and time is like, what do you have planned in your own day? And that time that you're buying or selling the stock, you know the reason, catalyst, which should be just as important, but some of them always fluctuate, and then the market environment, right? The market environment right now is very bullish. So since it's very bullish, oftentimes we're going to have stocks that's just going to continue to go up higher. uh, we're going to see that with moxe was one of them. CAVR, Carver Bank, was another one that did that. We're going to have these stocks that are just going to run, sometimes for no reason. So market environment is playing a good sentiment into what we're doing, um, at least for the other 90 points, right? So we're going to use this for today, and then hopefully we can be able to get through at least 5 different stocks where we can use this and say, okay, well, how did we figure it out, right? How do we get the points to it and figure out if this is adaptable to whatever it is that you're trading. Now, mind you, I don't tally up the scores every trade, but if I did, I probably would see that my number would probably be around 75, if not 85 out of 100, because most of the time I'm focused on the pattern and price and the risk reward. So if I know if I can get at least close to 15 on these, I am that's what, 30. So at least I have 30. My entry exit is usually okay, and I usually know about the past performance. And I typically go with some type of reasonable catalyst. It's usually the I would say it's probably, sometimes it's the market environment, because sometimes it'll be a Wednesday where, not Wednesday, Monday or Tuesday where the market is just goes to shit, right? So that would be the one thing that I would definitely have to look at, even though the market is very rarely bullish, very bullish. The float size. The float size is something that I often talk about, because if we're if we're looking for stocks that spike, which you're going to see it on on these charts, we're looking for stocks that spike a lot. You want to the float size help that the float size help push the stock higher. So if you see a stock that has a float size, meaning shares that are available to trade on the open market, they have a float size of about 3 million, 4 million, or 5 million. And on the day, especially pre-market, they're trading in the hundreds of thousands. That is something that you probably want to look at. And as a day trade, I'm not talking about something that's long-term holding, but something that on a day trade, that float size would definitely be helpful. You'll see that with Carver. Carver does that a lot. Um, Carver Bank, they have a low float, and you'll see what they look like once you look at their low float. Exit entry plan, actual entry exit plan, right? Because we sometimes we'll go in, we're like, yeah, this is my plan, but what really happened, right? So I'm glad that there's a space for that. And then you can also write down what the catalyst is that you're looking at. Institutional owners, maybe like a Warren Buffett, or you know, I'm trying to think of other people like other than Warren Buffett. I don't think any, but Ray Dalio. He's also very influential. Uh, uh, Drunken Millen, what is it? Millen. I think it's Drunken Millen or something like that. He's another guy. But Ray Dalio, Warren Buffett, those are like quintessential, institutional owners that if they were to invest in any stock that you're looking at buying, that would be something to write down. You're like, well, so and so invested. Or if it's a reputable agency that invested, that would be something that you can write down. Of course, you write down your profit loss, and then you write down your notes. Sometimes, the mentality, the psychology behind stocks is the defeating factor, because a lot of times, like, we will go into a trade, and let's say that we won, right? We earned some cash or whatever, and we just kind of advance and don't even think about asking any other questions, right? We don't write any other notes. So that's not going to help us for the times that we lose. So when we do lose, when we lose, we hope that it's only roughly about 20% of the time that we actually take a loss, and we still write down the notes on how we felt, what happened, what was going on, what changed from the actual plan that we had, little things of that nature. Um, so that I think that is extremely, extremely, extremely helpful for any trader who is uh, anyone in any profession. If you're in a profession, like, let's say you're a physician, and you're in that profession and you're not taking any notes about the progress of your patients, then what are you really doing? You're just kind of being there. You're right. You're just, and hopefully just, hey, maybe this might work, and then you throw it up against the wall and it doesn't really work. And so that's why I say note taking is very, very important. I will show you some of my notes that I've taken thus far in this month, so that it could give you an idea of what note taking might kind of entail. Like I said, I don't use the prepare. I use the prepare in my mind because I'm so used to it by now. So I don't write down P. I don't write down the actual number. Like, hey, this was 75 or 85 as a number. I don't write down what P is or what R or E is, but I have it in my notes where it's understood when I read it. So, so for instance, CPNG, that was one stock that I've been wanting to get in on for quite some time, since the beginning of the month. This past Friday, it actually did well, right? But when I bought it on the first, it it was still trading on phase one of the Wyckoff method. So if anything, I could have probably added, but I'm the type of person, I'll cut my loss. So that's what I did. As you can see here in the bolded part, I say what I bought, when I bought it, what time I bought it, how much I bought it for, and what the contract was, because this was a contract. If it was shares like BLRX, I'll just write down share right beside it, right? And then from that, I'll write down when I sold it. Sold it on July 2nd, 10 a.m., 50 cents, right? And I said, what? Why did I sell it? Because there was enough weakness showing possible tests of the support. And the support, what I wrote down and before, was this $40.80, right? When I bought it, it was closer. Oh, I bought it at 41.29, right? So yeah, I know that 40.80 ish is the actual support, and that was only about a 49-cent downside. That wasn't one that I was willing to risk, right? I said no, I don't want that part. I don't want anything to do with that, because if it goes there, then it can possibly go even lower. I believe it did. I believe it did at some point. It went a little bit lower, but not a whole lot lower. Um, and we can kind of look at it now. Actually, that would be a little bit helpful. So when we look at it now, when we see that one on the first one I bought it, it was right around here, right? I expected this because it was above the 5 EMA to continue trading above the 5 EMA, and it didn't. It kind of, it had this indecision candlestick here, kind of an indecision candlestick. I thought this was going to continue to go sideways a little bit and maybe even hold this supported price where I said was 40. Um, I said it was about 40, 80, $40 and 80 cents. So, so because it didn't hold that, it was coming down. I said, let me just get out, and I got out on this day. All right, but we see that it still was coming down for a couple of days until it found base. So it found base here at $38.86. This would have been the day to buy. I actually thought about buying it on that Thursday. I was at work, so I didn't get a chance to be in front of my computer to see how it actually looked. So that part for me is difficult because I'm not like some of these traders where they can use their phone and trade off the phone. But as we can see now, it's traded above the 5 EMA price. The MACD is starting to come above the zero line, and the RSI is starting to trade towards this overbought. It's nowhere near it. It's above the 50. 50 is that midway line between being bullish or bearish. So it's above 50, so it's in bullish territory. And the TTM squeeze is starting to turn teal. So we have all these factors that are going in its favor, but it's also near this breakout level of $42 and 12 cents. So because it's at this breakout, because there's a breakout here. Um, let me just go back a little bit. This is a recent IPO. Like, it hasn't been out too long. Been out since March. Um, I just knew that, hey, if it holds above this $42 area, then the limit is 69, right? So that risk reward is going to be crazy. This is a good $27 upside versus, hey, I lost what was that, 15 cents that I lost. Said, oh, okay, it went down, didn't do what I wanted, let me just cut my loss. It came down, 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 finally held a green, picked up another green. Tomorrow, bearing any news of what could possibly happen, doing with this stock, because this is a Chinese stock, and we know that China has been regulating a lot of their companies with a little bit more stringency. So because they've been doing that, it caused a stock called Didi, DIDI, to really plummet, right, from its IPO price. This is a car sharing service. So even though like the first 2 days it kind of traded sideways, it never really broke this resistance here, you know. So since it never really broke that resistance, the only place that it can go to is down. And since it didn't hold the support at $14, it continued to go down further. So this just shows the strength of how China, as a government agency, can not manipulate, but dictate where a price could go. It might be manipulation, but they have their own rules and regulations, just like America does. So this is something. Well, Didi is something that I didn't invest in because China. Um, but Calpang, right? It's supposed to be like the Amazon in China. I usually get fearful when I hear, large market cap companies being compared to smaller companies that are just starting, right? Because there's a lot of expectation from that. Um, but the price action is there, the long term chart is there, and so there should be some type of upside here. I see that once again, it's above the 200 SMA price, and then there was a cross here on the moving averages, a cross on the MACD, and it's not overbought, but it was moving up to be overbought, and it's squeezing here on the TTM squeeze. This is the 4 hour time frame. And then if we take it to the 1 hour time frame, we'll probably see that it was overbought on the 1 hour, kind of slightly, right? It was kind of slightly overbought. But this is what I like about the 1 hour because you can kind of see a little bit more of what happened in the pre-market and see if there's any other resistance levels, right? So we kind of see one here at this 42.25 area, right, that we didn't see on the 4 hour time frame. So we see it here, and we also see it here, right? That this, oh, and here, sorry. So these are some areas of actual like resistance. So when we see, once we zoom in, when we see this right here, it broke past that 41.25 area. But once it broke back here and came back down, that's almost like a fake out breakout. Like it faked out to break out, but came back down, which it did. It was overbought. And then on the last hour on Friday, it came back down. But this looks eerie similar. This green and red candlestick side by side looks eerie similar to what happened back here on Wednesday and on Tuesday. Wednesday is spiked up and then came back down, traded sideways. Did the same thing Wednesday morning, spiked up, came back down, right? And then it continued to come down. So I'm not saying that this day will do exactly what happened this day, because there was a couple of other factors that went into it. Like for instance, the 20 SMA price wasn't really over the 200 SMA price when this spike happened. But when this spike happened, it did come over. It was still kind of overbought, so that's why the price pulled back, right? Because it was overbought. So if I were to ever get back into this position, I would probably wait for the price to get to like this $41 area, just because it lessens my risk, right? That downside risk. Because if we're looking at risk, and this is the part where we're going back um, to these notes, right? If we're looking at risk reward, that risk reward is worth 20 points, right? The price pattern is worth 20 points. So we can look at this chart and say, oh, well, this chart has a great pattern, right? Because it's all phase one. All right, so let's go back to the daily chart. We can say that, okay, this has a great pattern because it's all phase one, right? All phase one. Yeah, it got a little spike there, but essentially it's all squeezing on phase one. But the risk reward is something that we'll have to look at. So the price that it's trading at right now is at $42. How would I determine where my risk price is? I immediately go to either the next support price, which the support here would be, hold on, let's zoom it out. Next support price would be, let's say, we could say it's still 41, kind of broke over it because that was resistance. So now it's really support. So we can kind of say that that 42.14 is still resistance, but the support, I would think it's closer to $40.20. And the reason why I say that is because right around here, it seemed like there was some a little bit of resistance there before it broke down. Here, it definitely broke down at that same resistance price or point. And then here, it did the same thing. It broke down right around that same price point. So that's how we would say, okay, well, if we're looking for downside risk, that would be one. Two is the 5 EMA. The 5 EMA will be the downside risk. It's at $40.84. The stock price is at $42. So damn near $1.50 of downside, well, almost $2 of downside. We don't want to risk $2 of downside, even though we might know that we're getting $27 of possible upside, right? And so we want to be as close to, here on the 5 EMA, we want to be as close of an entry that we can get to this $40.84. So when we look at the smaller time frames, it gives us that opportunity to kind of narrow it in. Like, what does it look like on the 4-hour time frame? We see that it's $41.41 at the 5 EMA, and on the hour chart, it is $42.09. Right? It's trading below the 5 EMA. So we start looking at what the 20 SMA price is. The 20 SMA price is at $40.99. That's close to $41. We said that the support price was right around, what was it, 40 dollars and 30 cents. So we're seeing that this ain't $40.99 on the 20 SMA price. Maybe intraday, once we go to the smaller time frame, 2 minutes, 5 days, 2 minutes. It made a new high on the day. So because it made a new high intraday, part of my rule is that I expect it to come down below the 200 SMA price. It just has to. And why I say it has to is because this example has been shown over and over and over again. So I know I'm going to show you a couple of other stocks that hones in on that. Well, it went to a new high intraday. How do you know it's going to come back to the 200 SMA price? But before I get to that, does anyone have any questions about what I've even mentioned thus far about the note taking, about support, resistance, risk reward? Yeah, anything, chart pattern, time of day to buy, catalyst. I said it's a lot. And when you have stocks that go up high and then they come down low, sometimes you say to yourself, damn, I wish I took that profit. Um, or there could be that opportunity where you say, okay, I know it's going to pull back to that 200 SMA price and below the 200 SMA price. Should I add to my position? And how do you know when to add? You know? So does anyone have any questions thus far? I'm going to show you MOXC to highlight that. I'm going to show you a couple actually to highlight the whole, intraday. It's going to come back to the 200 SMA price. This is like part of my rule. Um, Mind you, sometimes, it will test the 200 SMA price, trade below it for a little bit, and then pop right back up. That's when you have to use the other technicals. That's when you have to use the other technicals that help guide you on that. So let's see what MOXC. MOXC was another stock that I've been wanting to rebuy in on. Um, Actually, I will show you my notes on this one. BLXR, MOXC. I bought this on July 2nd at $23.65 a share. I believe I bought it on my Wells Fargo account. Originally, I wanted to buy it at 23.20, but then the price skipped. I put down the downside risk is $22.89. The upside reward is $24.60 towards $29 a share, right? And I am already mindset thinking that I can possibly get $5 to $6 a share here, right? If I bought in at this price. Well, what ended up happening is that uh, I said that this trade was forced because I saw that and I wanted that upside. Um, and I couldn't really get all of that upside. And I feel like, did I sell it higher than that? No. Well, I did sell it at $24.10. I thought I sold it at $25.10, but that's fine. I'll go back and look at that. But even though, right, I said, hey, it has an opportunity to go to $29. And when the market opened, which we're about to show you, when the market opened, it went to $24. Yeah, but it also made a high in the pre-market. So let's go to that day. We're gonna go to that day. So on, hold on. So on that day, where's July? And I'm tapping, tapping, tapping. There we go. So this is July 2nd, right here. This day, right? That's the first. This day right here is the second, right? So we're going to zoom in a little bit. We're going to see the second right here. Oop, that's the sixth. This is the second. We see the second right here. As you can tell, everything is still trading above the 5 EMA. It's not overbought on the daily, right? And as you can tell, it continued to go up higher. I did say it was going to go to 29. This is where I'm working on. That even though I know it's going to go to 29, it's at 20. It closed at 28.35 on Friday. Went to $30. What happened? What happened, you might ask? Um, on the first, when it did go high, now mind you, $30.72 is the high. Um, on the This is the first, so this should be the second, right, right around here. So when I bought it, and it sucks that I bought it on my Wells Fargo account instead of here because it doesn't show you the arrows. But when I did buy it on the second, it did I buy it on the second or the first? Did I buy it on the second? Let me double check. MLXC, yeah, I bought it on the second. I sold on the sixth. I'm sorry, sold on the sixth. That's why it was bothering me. So I sold on the sixth, right? So when I bought it here on the second, it was around that 22. I don't even know my own prices. 23.65. I didn't write down the time. Boo. So that's poor note taking, because now that I try to refer to it and show you, I can't really give you everything. But I know that somewhere around here, I end up buying it, right? It had to been after lunch, because this was just looking too good. But when the pre-market happened on Monday, because this was Friday, the second, but when the pre-market opened on Monday, um, I was seeing a whole lot of resistance here at this 23.92 area. So I wasn't 100% sure if it was going to break that. So when the market opened and we got this big spike, yeah, I know I didn't sell it at 24. I had to sell it at 25. I have to double check that. When it got this big spike here, I could have held it a little bit more. Went up to 27. Because because we can't really go back, but what we can do is show you that once a new high is made, that stock price will go back down. And let's go back. Let's see if it'll go back to 5 days. Go back to the second. I doubt it. Nope. It went back here to the, oh, it did go to the second. Okay, second, six. Okay, so a new high was created here. Once that new high was created here, you see how it traded below the 200 SMA price? The red line is the 200 SMA price. This red line right here. Once the new high was made, because none of this was happening over here none of this was happening. So once this new high was made, it pulled back. Had to. That's just what it does. And it will do that. This happened at 11. Sometimes it will happen at 12. Sometimes it will happen at 10. Once a new high is made, that price will pull back below the 200 SMA price. And it stayed below the 200 SMA price for a couple of days. And the only way that you would know to if a stock is, bottomed out, found support, and it's going to trade up higher is by following the technicals. But first one is finding support. What is the support price? The support was right around here at $21. Right? The all-time, well, not the all-time, but the low was at $20.50. So the year chart was not going to allow it to pull all the way back down because it wasn't overbought yet. So even though it was overbought on the intraday chart and made a new high on the intraday chart, see, it was overbought. Even though it was slight, it was still overbought. The MACD, the momentum was strong, but it pulled back. Even though it will be overbought or a new high was created on the intraday time frame, the price will always pull back below the 200 SMA price. And the only time that you can identify if it's going to come back is when all the moving averages coalesce with each other. So this right here would have been a fake out because the moving averages on Wednesday came together, right? All of them came together right here and then still found this resistance at 22.96. It really couldn't go any higher. And that's why it pulled back again. And as it pulled back and stayed below the 200 SMA price, it tried it again, right? And this is where we have all the, both moving averages are above the 200 SMA price. Now, I remember being on the train looking at this price and was like, wow, I can't even touch it. Right? Because this is Thursday. I was on the train looking and I said, you know, I really have to stay disciplined and only buy when I'm in front of my laptop because if I buy on my phone, it doesn't, I don't get the same results as I do if I'm buying and selling in front of my laptop. Um, and so we see that it made a new high, right? And we say that it made a new high because on this was Thursday, because on Tuesday, right, or Monday, yeah, Tuesday, the price was $26. Right? That was the high, 26.33. Now it's starting to make a new high over here, 28, 28, 23. Now this day was Thursday. Thursday late in the afternoon, around 3 p.m. So now that we enter into Friday, what we expect? We expect it to go to the 200 SMA price. It kind of didn't do it then. Like it, and before I go even further, what it did was, and this is what you will see on a lot of market opens, that the stock price, let's say that you wanted to get in on this day being Friday, because you saw the magnanimous movement that it made on Thursday. So you said, I want to get in on this because this stock apparently has a lot of momentum behind it and it has some, you know, interest of buying of MOXC. Yeah, all of that sounds good. But when that new high is made, yes, the next day it might make a new high. It might make another high, but it's going to pull back to the 200 SMA price at some point. So this is how you try to figure out where your risk reward is. And that risk, if you bought here at the minute that the market opened and then sold here, so this is from $26 to $29, that's a $3 of upside, I think you've been fine. But if you bought like around here or even here at the top, that's a disaster waiting to happen because now, as we can tell, that the stock price came back to the 200 SMA price, and this is not even 11 a.m. yet. Now we're hitting 11 a.m. This is 11:12 right here, where we see the strong green candlestick kind of basing at the 200 SMA price. Would I buy this still? No. I would wait to see if it does trade below the 200 SMA price. But as we're looking here, we see that the MACD cross, we see that the RSI is below 50, right? Because it came down and now it's just trading sideways. The histograms on the TTM squeeze are not only yellow, but they're getting smaller and smaller and smaller until it gets to the zero line. And we're not even going to look at the implied volatility because that doesn't really matter right now. But now we see that it base, right? I'm not sure if I said that, but it base. This is support 2670 to add that with the moving averages and the technicals. So we see that 2670, like at the morning open, has been held. So we continue to go a little bit further towards noon, towards lunchtime, we see that it's making another run to retest the previous high. The previous high was near $29. Well, going to $30, I should say. So now that it's going back towards $30, we continue to go further and further on over and made a new high. Broke here, which was at 30, finally went to $30.72. We can, and this happened 2 p.m., like 2:06. So when we continue to go a little bit further out, it should start coming back to the 200 SMA price, which it did. And not only did it go to the 200 SMA price, it started trading below the 200 SMA price. Yes, it was finding some type of bounce here, but remember that bounce is because of support, right? So even though it bounced off of support, you still want to see that both moving averages are above the 200 SMA price, just because the new high was created. If that new high wasn't created this day and the stock traded below the 200 SMA price for at least one day, then I would say once it makes a move like this, then you can start looking to buy at the support price. But if it has not been trading below the 200 SMA price for at least a whole day, then it's harder for me to say that this is a good purchase, right? Maybe this might be because when we look at the daily chart, it's still above the 200 SMA price. It's still above the 5 EMA price. Move it over. Still above the 5 EMA price, which is this green line, right? 25.45. But remember, that's $3 of downside from the stock price of $28.35. That's where it closed on Friday. It's just becoming overbought now. So I would expect on Monday that there might be a little pullback so it can trade sideways. But I also would not be surprised if it goes higher and does an exponential repeat of being overbought like it did here. It was overbought for a couple of days. Over here was overbought for roughly 3 days. One, two, three, four. And then it came down on a strong red day. And then was overbought a couple of days here. Right. So I wouldn't be surprised if this actually goes to be overbought versus pulling back. But because it made that new intraday high on Friday, I would only expect it to trade below the 200 SMA price. So if it does trade below the 200 SMA price during the pre-market and then it waits until the end of the day, which that tends to happen, where a stock will be down the whole day below the 200 SMA price and then starts trading higher towards the 200 SMA price towards the end of the day like it did here, that would typically happen around the 230 time frame. So you can't see that on this stock, but maybe you could see it on something like J&J. So J&J I bought on Thursday. When I bought it on Thursday, I sold it up here on Friday, just because of the fact of what I just explained to you. So let's first go over the notes, so you can see that. And then after that, we can probably go over anything else because I know that I could show you all of my notes, but I want to make sure that I hear from you and understand from you on how you are analyzing these charts and how you are taking the notes so that it reflects in the chart. Um, so I'm here with J&J. Like I said, I bought on July 8th at 356. Right. I was looking at buying it for a majority portion of the day, and I had to wait until I got in front of my laptop to do so. Right. So once I got in front of my laptop, I was like, okay. And it was 4 minutes before the close. I bought some contracts at 98 cents for the 170 call. Um, and I said, an intraday high was created yesterday. And it traded below the 200 SMA price intraday, the intraday price. 168 and 56 cents a share, majority of the trading day until a bit before 1 p.m. So I put down that the 171 share price is resistance, while 173 share price is the all-time high. Yes, okay. So I was looking at this as a resistance and also looking at this as the all-time high because I was looking at how high could it actually go. This is resistance, but does it have two more dollars after that resistance? I want the overhead resistance to be tested at least while not testing the 168 per share. So I didn't want it to come back, right? Because that was the downside of where the 200 SMA price is. And then I ended up selling it right at 9:38 a.m. for $1.45. The new high was created at 170, and that was at the first 10 minutes. So, that was my notes for that. So when we come to the actual chart and we're looking at J&J, Johnson and Johnson, we still see that it has some upside, right? And like I said, I did this on Thursday or Friday, sorry. Um, we still see it has some upside. They have earnings coming up. So usually when a stock has coming towards their earnings, a stock price typically does well, specifically for a company that's been supplying these vaccines for the coronavirus. And so we see that, you know, this was a good buy. Essentially, at the end of the day, it was trying to retest this resistance. It broke on Friday and kind of held on Friday. If we look on well, let's break it down by time frame. We see that yes, the all-time high in the past 360 days was $173.65. Right. When that high was made, notice it came below the 200 SMA price. It tried a couple of times to stay, quite couldn't stay because the supported price needed to be held. Once the supported price was held, then the stock and the moving average prices, all three, moved above the 200 SMA price. And yes, I say all three because the stock price influences the EMA price, which influences the SMA price. And once the EMA and SMA are above the 200 SMA, is all influenced by the stock price. So that price action, which is most important above everything, is is quintessential in seeing where the movement of the moving averages are going. So we still see that it's trading above the 200 SMA price, continues to trade. Yeah, it did collapse a little bit here because it couldn't break this resistance. Notice where resistance is. Resistance is back here. This must have been a fake out breakout, right? And how do we know if it was a fake out breakout? Because if we see that resistance from the past is kind of similar to the present, we need to look to see what the RSI says. The RSI says overbought. It was overbought then. It was overbought. Couldn't maintain. It had to pull back. It pulled back, went to the 200 SMA price. So that's the thing about stocks that are overbought. Once they're overbought, and they made a new high, it has to pull back. There's something like only unless that catalyst is very, 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 very strong, and we'll see a strong catalyst um, in the news, like vaccines, for the coronavirus or treatment for Alzheimer's, because Alzheimer's treatment has been moving quite a couple of companies. AVXL was one of them because that's one I'm still looking at getting into. That they are a stock that is focusing on Alzheimer's and neurodegenerative diseases. So when we have a company like this, and we know in the news that hey, there's these stocks can move because of one company that was Biogen. Biogen came out with Alzheimer's news saying that it was good, but not good because the results kind of didn't reflect what beta amyloid degeneration could actually look like in people with Alzheimer's. So it was like, okay, but not okay. That's why the price continued to plummet. We still see that it had an effect on other companies. Like this day was what? This was June 7th. So when we talked about AVXL, it wasn't June 7th. This was June 7th. But notice after that news of Biogen, it did continue to go up higher, right? It just continued to go up higher and higher and higher. Right, so this was on the 7th. On the 7th, it was at $14. On the 28th of June, $33, right? Sava is another one. A one that I wish I was still in, actually. But Sava, after it did this spike back here, I would only expect it to retest its previous high based off of the news on Alzheimer's disease. And we can, once again, even though this is the 4 hour time frame, we can still see it made a new high. After it made its new high and traded sideways, it had to come below the 200 SMA price. That's just how it. If that's the lesson for today, once a new high is made, look for the price to come below the 200 SMA. Because once it's below the 200 SMA price, then you can start looking to see if it's going to hold support. Because if it holds support and it's below the 200 SMA price, and then you say, yo, it held support, the sentiment around it is still good. Maybe I can buy some shares here. And then you buy some shares. You don't have to buy a whole lot. Maybe you buy a couple, right? But definitely could have bought back here because when we look at on the 4 hour time frame, it was oversold. This is perfect. This is when you buy. You buy here when it's oversold. But you don't buy here when it's overbought. And here when it was overbought, when we zoom in, this is the 4 hour time frame once again, just to put it in perspective. When it's overbought and the both moving averages are not above the 200 SMA price, it's going to get slammed down. It's going to get rejected. And that's what happened. So that will be the next type of catalyst is that are both moving averages above the 200 SMA price? And if that is, then the stock price can go higher. Um, so, I just wanted to highlight some of these things because, you will have a catalyst that will help move a stock even further. And it will go higher after it made its new high. But the pullback to the 200 SMA price intraday specifically is essential because when you're looking, like for instance, we're looking at this chart here, Sava, and I'm going to go back. But when we're looking at it and we're seeing, okay, well, they had a red day on Friday. That's fine. Why did it have a red day? Not that the stock price was bad or anything like that, or the news was bad. It was just that it was getting overbought. It was trying to retest its previous high and hold above it, right? On the daily chart, this daily chart, when it traded on February 4th, we can say that this was the high. And I usually lean toward the block versus the wick on creating my support and resistance price. But even if we go to the wick, we see that the stock price at the wick was kind of almost being tested by the stock price on Friday's wick. It was coming close. So, it rejected that price. It said, no, you're not going to make a new high. You're already overbought. Go back down. So then you start looking and say, okay, well, since it came back down, and if it closed below the 5 EMA, which is 95.96 on the 5 EMA price, the stock price is 95.34. You start thinking about, okay, well, maybe it can come to 84.59. If it does that, if it thinks about going there, you want to first look at the supported price. What is the supported price? Supported price is somewhere around this $90 area, like right around here and right around here. See, about $90, maybe 89.75, right? Would be the possible downside risk, right? That if the stock price closed below the 5 EMA, the next supported price is 89.75 ish. And then if that breaks down, then it's definitely going to the 20 SMA price, right? So we'll see that with something like Sava because of, FDA Alzheimer's treatment. But when we go back to, Johnson and Johnson, staying in healthcare, um, we still see that, hey, look, it made its new high intraday. Let's go back to the 4 hour time frame. It made its new high. Nope, not the 4 hour. On the 2 minute. It made its new high on the intraday on Friday. It has to come back to the 200 SMA price. It has to trade below it, right? So if it trades below it, now I'm looking back again to my notes. I said that my notes was that the supportive price was near 168.56, right? Because that's where it was trading below the 200 SMA price. I said the resistance was 171.64. So if we're looking for 160, we're seeing that 169 is support, not 168 on the intraday time frame. Then maybe we'll wait to see if 169, I say 169 because of right here. It tested price here, fell down. Tested price here, fell down. Tested price here, fell down. But on Friday, it broke that price, went up, traded sideways, came to the 200 SMA price, kind of bounced, and been trading close to, if not above, the 200 SMA price for the remainder of the day. All right. So that 169 that it came to right here was just as good. Was just as good as a support price. So now that we identified the first support price, we know, like we said, made a new high. If it breaks 169.40 and goes lower, the next price that it could possibly go to would be, I would do ultimate downside risk. So I would say right here at 167, say 167 because it's a clear breakdown of price. 167 there, 167 there. And there's a clear breakout of price, right? 167 right here. 167 like 60-ish. So it broke out price and then went up higher here. Um, we see that it was trying to hold 167, 65-ish or 60-ish, and then it fell down further, right? So we know that, okay, at least we know that 167.60 ish is around, the next downside support. So that's how you would like break down a chart and wait for the actual price action to move. Once that price action moves and it starts moving around your support and resistance prices, and it starts moving below the 200 SMA price, you say, okay, well, if it's below the 200 SMA, are you near my support? And is it oversold? And if it's near the breakout levels, is it near the resistance price? Is it near the previous high? Because if it's near the previous high and you're buying near the previous high, you're kind of wasting your money because you're not giving yourself a chance to get maximum upside, right? And these stocks are always going to move. There's always going to be a new stock moving. Always, always, always. But, you know, to buy at resistance is not the best. You might have a great chart, but it's still not the best. And I will show you why that's not the best by giving you an example of space. Like I said, we're going to go to. But I still think Johnson and Johnson is a buy long term, at least before their earnings. That's me. Um, does anyone have any questions? Questions. So I know that space is one of those stocks that I think it became a meme stock, and I'm not a big fan of those either. Meme stocks are like AMC, Express, GameStop, um, KOSS, BlackBerry. I feel like there was an overstock, maybe even Bed Bath and Beyond. All of these are on Reddit platform, and people are trying to push the stock up higher because they're heavily shorted. I just believed in Virgin Galactic. I'm not believing in anything that the mean people would say. I rarely follow the herd. I get nervous when everyone is bullish, and I get greedy when everyone is scared. Right. So I'm like, okay, everyone's scared. Good. Everyone's hyper. Okay, I'm scared because I'm not a big fan of that. I think Warren Buffett said the same thing too. So when I bought space, I bought it on this day, right? On Thursday. Now, mind you, when I bought it, let's actually look at my notes. And I actually didn't finish writing the notes to it because I just did not have time to come back to write my notes. So this will be a perfect time opportunity to show you how note taking would be, right? So going to the notes, I said that I bought space at 3:30. Typically, part of my rules is that I'll buy a equity to hold overnight after 2, maybe 2:30. But I will definitely start researching like around 1:30 and start looking like, okay, what's there? What is there? I don't know. I'm not sure about that. Okay, what's going on? But once 2:30 starts coming around and things looking a little bit more formidable, and then 3 p.m. starts coming around, then things start to show you what they are, right? Before they close. So I thought space was showing me what it was, essentially, because it was showing good strength, and I put down in my notes, I bought it 329, $51.21, space exploration that has this company up on the day and possibly throughout the weekend, right? So I was even looking on the weekend because I'm like, okay, I bought it on Thursday. Hey, the CEO is going out of space, should go up higher. um, an intraday high of $59 was created last week Friday, looking good, right? The company's all-time high is $62, looking even better. Downside risk $47.10. I'm like, all right, I'm willing to risk $4 of downside, right, for a possible $9 to $8 of upside, right? That's 2 to 1. I said, all right, I could do this, right? This looks about right. So it's a downside risk 47. I did it at $57 as my reward, right? I said I'll rather six. Same thing what I did with MOXC. Same thing. I'll always minimize my risk to be a little bit lower than what I actually think, right? Not my risk, my reward, because sometimes the reward will go a lot higher, and I'm just like, oh, okay, I had no idea you would go that high. So when I was looking at, oh, I really wanted MOXC, but stock price already ran before I could set my order, right? So this was on Thursday. So clearly, I was looking on getting in on something. I got in on J&J. I was looking to get on MOXC and J&J. Space end up being the alternative. And sometimes when you go with the alternative, that's not always the best, right? And that could probably go with anything. If you're using cars, medicine, clothes, you go with the alternative. Sometimes that's not the best. So I felt that. I felt that today. I felt that on that day. So so yeah. So let's go to let's go to the actual chart itself. So I can stop beating myself up over it. So we're at space, and we see everything I wrote down: $62 previous high, trading above the 5 EMA at that time. Right, it traded above. The one thing I didn't take into account for is that when a stock does have a strong green day like this, sometimes the very next day can give you an indecision candlestick, right? So let's look at their chart. Previous past performance, right? I'll show you that previous past performance, 1 out of 10, or 1 to 10, I should say, right? The past performance, if we were to rate the past performance, does it follow its past performance in the present, right? And it did, because after a strong green day, like let's say here, back May 25th, let's just zoom in. After it crossed the 200 SMA price, we're that's where we're at. So this is May 27th, this is May 28th. Strong green day on May 27th, May 28th, red day. Strong green day, red day. Came down next day. Green day the next day. Red day. Strong green day, possibly. Next day, red day. Green day. These are green. So this is what you want to look for, right? You see the green, the red, the green. This type of green candlestick, especially with a hammerhead like that, typically produces another green day. Typically, I'm not going to say that this is just something out of the technical textbook, but typically, this hammerhead with a wick that's low like that, just think that the body of the candlestick becomes that actual like support a price, right? For that day, just for that candlestick. If you have a long wick down here and a body right here, just think that every share contract, whatever that's happened, the activity in that day is holding that price on the green. If it was on the red day, kind of like this, just imagine it's just the opposite. Like this day, these 2 days, it was like, okay, we got a long wick, a lot of downside pressure. The downside pressure is stopped right here, but it can continue to go down further, which it did. It stopped, the downside pressure stopped right here, and that's what happened on this day. It was trying to go back down, but what happened is that it bounced and continued to go up higher, creating the body on this day, and then creating more green candlesticks. Strong red day at resistance comes down, still above the 5 EMA, but it's still retraced. We got the green candlestick here after an indecision green candlestick here. Then it was just trading phase one, which is surprising. I would expect it to come back a little bit. The only reason why I say it's surprising because I felt like even though this is this is continuation of phase four, and then this is phase one underneath the 200 SMA, and then all of this becomes phase two because it just kind of moves up on the side like that. Then I'm thinking, okay, phase three, right? I'm thinking, okay, baby, we should have phase three, but because of the sentiment, it continued phase two up higher, right? So that was another reason why I wanted to buy it because I had it before this run up. I had it back over here, and then it came back. Where did I? Oh, that was back in June. Yeah, so I bought it. This is my first time buying it in July. When I bought it in June, and I was like, okay, you did pretty well. I'm not even gonna go to those notes. Forget it. Doesn't matter. I'm not gonna go to those notes. But once I bought it in July, I was like, all right, I know this price movement. I know it can do the things that I feel that it can do, and it did, and it pulled back. Essentially, it pulled back after this strong green candlestick. We got the indecision candlestick. So on Monday, whatever is being said after, you know, or during the space launch shuttle right now, whatever happens, and we come back on Monday, and on Monday pre-market, the stock now only holds above 49.20 because they come down to 48. Not only does it hold 49.20, which is above this 5 EMA price, which was 48.33, but it comes to retest this $53 price, then it can go up higher, right? So we hope that whatever is said over the weekend about this shuttle for commercial space flight produces a green candlestick. So on the intraday time frame, well, actually, let's once again go go through the progressions. We'll go through the 4 hour time frame, see if we see anything kind of unusual. No, it went up high, came down, right? Maybe new high, came down like it's supposed to. Traded below the 200 SMA price. Continue to trade. Right? It tried to hold one support price. Couldn't quite do it. Came down a little bit further. couldn't quite hold that price, and then it came down. So this is why having multiple downside prices of support will, at least limit your risk. And you can say, it was coming down. I don't know. It's looking like it's not trying to hold. It might be overbought. Let me just get out. After their earnings, they kind of just ran, right? They held that price at $15. Imagine if you're a holder here at $15, waiting for the stock price to go back above the 200 SMA price, then you'll recognize that, hey, it's just going to go up higher. But that's on the 4 hour time frame. The 1 hour time frame suggests that, yeah, after earnings, can't believe it was at 13. Oh my God, $13. So once the once the moving averages started to coalesce, and this was back in May 20th or 2019, May 20th of 2021, it started to go up higher and continue to go up higher. Clearly, it hasn't made a new high yet, so it's only going to go up higher. It hasn't made a new high. There's no reason for it to pull back, right? The previous high, once again, $62. So it hasn't tested 62, but it tried at 61, right? So if you ever hear the term double top, this will be almost an example of a double top. It didn't quite get the 62, but it kind of did. It's kind of like Sava. Sava didn't quite get to 120, but it got to 118. So that's, it's not an exact science, but it's close, right? You don't buy things for, $15 or $20 when you go to the store to buy a shirt. You typically buy it for $19.95. and then they add on tax, which I still think is stupid. But anyway, so there was a double top here. 60 pulled back. Like I said, I end up buying on this day, uh, June 8th. So we see June 8th, we had a strong green candlestick here. That strong green candlestick continued throughout the day. Right? Now, how did I mess up? Right? How did I mess up on this stock? Being that, hey man, you bought at a good price at $51.21. You bought it uh, at 330, but I also bought it, which I'm still mad, while it's overbought on the hour time frame. I also bought it when it was trying to retest the previous high. And I'm not saying that that's a bad strategy. You want the price to retest the previous high. But the price point that I bought it at was wrong. All right. Because I bought it while it was overbought. I also bought it. Let me see if there's anything else I can suggest that does not. I bought it near resistance, right? So you're seeing here, even though it went up higher in the after hours, right? Still, this is getting to a close resistance price. This hour, and why I say resistance, because back here would have been a good resistance point right here, even over here. Kind of shows you that, look, man, this is kind of resistance here, kind of resistance. So you should probably be careful, right, of what you do. So I wasn't careful. So I bought in, wasn't careful. The price went up to 54. I think it almost touched 55 at one point, and then pulled back. That pullback was something else, because it seemed like everybody wanted to talk bad about the space flight. They're talking about Richard Branson and how he's too old and all this other stuff. So it just kind of pulled the price down. So now that we see it on the hour chart, let's go to the intraday chart. And on the intraday chart, not only, right, we see that yes, it made a new low on in the past 5 days. The previous high was $59 in the past 5 days. 59.33. That's what the price that I wanted to go to, but clearly it didn't go there. It found this stop right here, 54.78. Right? That was near that previous resistance that I just pointed out on the hour time frame. So now, not only does it trade and go sideways, but once pre-market opens at 4 a.m., it's at $51, just damn near where I bought it. Damn near. I'm like, what? Like, what happened? And then not only did not, and I bought this on my Cash App, which I once again, this is the second time, so this is not going to happen again. They don't have stop losses on there. So if you buy a stock and you're accustomed to put in a stop loss price, then um, Cash App is not for you, right? Uh, Robinhood does it. Thinkorswim does it. Every other platform does it. Cash App doesn't have that in there. So putting a stop loss was not happening. So what I said I was going to do was wait, because sometimes these collapses happen pre-market, going into the market day. Um, I said I can hold 49, no problem. It comes down to 49. Okay, that's $2. That's not what I wanted, but it's not at 47, which is not what I want, right? I said I can risk $4 for, $7 to $9 upside, or $6 to $9 upside. I could risk $2. So that was my risk. I risked it. I saw that it still couldn't come down. It was trying to come up. Both moving averages were trying to come above the 200 SMA price. But at the same time, that still didn't happen. It got rejected and then it came back down. So I ended up selling this. Let me see, what price did I sell this at? I know it was, go to, I get the email, so it'll come to my email account. But I ended up selling this. I think it was closer to 49. Actually, I was like, you know what? I'm one of those people that, like, once I hit that pain threshold, I'm like, I already done lost $1.50 of some nature. Once I've hit that and I just can't do anything else and I can't wrap my mind around anything else, then it becomes a lot harder. And I just say, you know what, forget it. I'm out. I'll rather take my loss and move forward versus trying to wish and hope, hold and hope that it goes up higher. I've seen it work against me before, trying to do that, so I just don't do that anymore. I just cut my loss, get out, get into another trade. Obviously, going through the progressions, get into another trade, and then see what the price, where I can get in at or get out at. So I sold. I'll show you how the Cash App kind of looks like. So when you're selling anything on Cash App or buying anything on Cash App, I have it where it will tell me, email me like how much I put in. I put in, well, this is how much I got back from it. I got $481 back. I put in, I think roughly $500 into the stock. And so I sold it at 49.32 stock price. And the time of day was at 3 p.m. just because I was like, I can't do this anymore. I, and mind you, it could go up on Monday. I just knew that if it's trading now and there's a lot of negativity behind it, it's a red indecision candlestick. On these red indecision candlesticks, sometimes, those wicks play a big portion of where that red or green day could go, right? So if we look at this candlestick here, we see, it's a small candlestick. It's not a long one like how this one is, right? Or this one. This one's probably a better representation of it. Because you see how this wick right here is now being filled by this body of the candlestick? That is what I try to avoid, right? So on this day where you have this red candlestick, there's no wick. That means the stock went up, right? This is the second. That means the stock went up before it pulled all the way back down. Let's test that. Let's see what it looked like on the second. on the second. That's the first. This is the second. Yep. So on the first, after hours, it ran up high. I think this is when Sir Richard Branson said that he was going to go. He himself was going to go on the spaceship itself, and then you see how it collapsed. Once the market opened here, it collapsed, came all the way down, filling up all that green that just happened. Right. So when we go back on that day, right, we see that this was filled. This wick was filled by this candlestick and continued to go down. It was red here. They announced some news on the second, they announced some news after hours. Announced some news after hours, but you notice, right? Once the market opened on the second, the very next day, the stock price came down. So this is where, Grace, you asked before, like, when is news being submitted into the market? After hours of the pre-market. And this is exactly what could typically happen in the after hours leading into the next trading day. You'll have some news come out, and then news on a stock that's heavily shorted, meaning that people are betting against the stock, could push the price down. Once they push the price down, then it's like it's working by itself again. But you see that it's like a full blunted candlestick, right? Kind of like this one, like a full blunted candlestick. Once it's a blunted candlestick, that bottom, people are going to buy there. People are going to figure out how to buy at that bottom. But at the same time, it's a pulled back. So how it pulled back on this day, can't quite grasp my fingers on that one. But it definitely had a strong green candlestick on this day. Now, I'm not saying that the buyers from the 6th sold on the 7th once they saw the downside pressure coming, but whatever happened, once a wick like this kind of happens, I expect it to be a red candlestick, kind of like how these two looked like each other. Even though it was overbought, it still had the wick to fill that gap, if that makes sense. The wick can fill the gap. So I thought on this day, Friday, that the wick, at the time, the wick wasn't as filled as it is now. Let's go to the intraday time frame. See, it did go down lower, right? So I sold, I sold here just because I was just like, I can't do it anymore. So I sold here, and I really, while I was inspecting, I was doing another job. I inspect restaurants too, right? So when I was inspecting a restaurant and I saw that this was trading above the 200 SMA price, yeah, I could have possibly sold it there, but I didn't. And even when I was like contemplating selling it when it was at $51, I still could have sold it. Didn't do it because it was showing that it didn't have enough strength to hold above the 200 SMA price on a Friday. Um, so, so what we'll do is write the notes, and I will definitely take questions now. So like, let's go over some stuff. I've talked about 5 different stocks: Johnson and Johnson, MOXC, CPNG, Sava, Biogen, AVXL, and now uh, Virgin Galactic, right? So does anyone have any questions about, because this stuff happens the same way over and over and over again. It's just that, your own psychology. How are you going to hold up to it? Are you going to convince yourself I should hold in hope, or get into a position, wait to be patient for a position on a stock that you can put in your money and be comfortable, so that when it does pull back and give you that retracement, you don't have to think about, damn, I should sell my shares. You can think about, maybe I can just add to my position, right? Like Sava. Sava would be a good one to add to a position to. MOX, no, not MOXC, actually. Johnson and Johnson would be one, definitely. definitely. Once have a pullback, it can go up higher. Once instead of selling it, maybe I could just buy shares. So these are things that you can probably like put into consideration. So does anyone have any questions about what I said or what was said so far? No one has anything to say. Do you have a stock that you're looking at that you feel like you know you're not 100% sure of, or a company that you might be thinking about entering in on? Anything. It doesn't have to be rather specific, but at least a question that lets me know that you're at least grasping the material and you're kind of seeing it for yourself.
Thank you. I'm grasping the material, by the way.
Say that again.
I'm grasping the material, by the way.
Yes. You're welcome. And yes, grasping this is a lot. So I understand the whole grasping of it. When you're trying to grasp the info and trying to put it all together, it makes it really, really tough. Or not to say put it all together, it makes it tough, but putting it together and then trying to apply it like the next day kind of makes it tough. You're not going over and over and over it again. It makes it easier. So, yeah. So, Thursday, 7, 8. Strong blunted. Candlestick was created.
I'm still.
Hey. I have to mute one of those.
Can you hear me? Hello.
Everybody okay?
Yeah, I'm okay.
Good. There you are.
Can you hear me?
Yes.
Can you hear me?
Yes, I can.
Okay. I'm just letting you know that I'm swimming through a little bit of clear water. I'm getting a little bit of grasp of what you're saying. So I'm thanking you on that.
You're very welcome. You're very, very welcome. I think, when we use these multiple time frames, people, sometimes, and I should be probably just speaking for myself, and sometimes when we use the multiple time frames, like we go from the daily to the 4 hour to the 1 hour to the 2 minute, or whatever other time frames that people might be using, is that You know, just think of all those smaller time frames. There's truncated versions of the bigger time frame. So, you know, even though it's a 2 minute time frame, a smaller time frame, if you come back out and span out to the daily time frame, you will see that the stock really didn't make a massive move, right? Because even though this stock made a move, let me share that with you real quick. Even though the stock made a massive move, it still you know, came down, made a red, but it still traded above the 5 EMA or closed above the 5 EMA, which is a positive sign, right? If it closed below the 5 EMA, then that's when you will have a little bit more worry. Um, so I'm not saying, once again, that it's going to go up on Monday, but I think that the opportunity for it might be there, just because of how the stock price is kind of going. And maybe I could be wrong, right? The next supported price looks like it's around 48, 48.60-ish, right? Maybe from 48 to 47.60. Um, but identifying support, resistance, always super helpful. Just because it gives you a chance to ID where the price could actually go. And like I said, this stock could possibly go up. It's oversold. Well, it was oversold in the after hours. It was oversold almost all day. And that's the thing. It made a high. It made the high before, and even though it was just retesting previous resistance, right, or previous highs, like this was a previous high before, um, because it was higher than this high. It was high here, pulled back, and then pulled back. So that this stock intraday will do those type of things. It would make a high and then pull back, and it would trade below the 200 SMA and continue to trade below the 200 SMA as it did. Try it again, pulled back, and it even get to its previous resistance. So sometimes just identifying where that support price is just as helpful as identifying where your risk and reward is, or just as the reward can be $10 above, and you're just like, okay, it's going to get that. But if you don't understand where the risk side is, then or at least identify where downside risk is, then you're going to have we're all going to have a tougher time, right? Because I said that my downside risk was $47.10, but clearly I'm adverse to risk. I do not like risk that much. Like I'm like, So I end up losing $2.10, right, a share, which was fine. I can handle that because it wasn't like a lot. Only bought about $500 worth, so that ended up being how much? How much did I actually lose? I lost, I think it was $30 maybe. It was like $30. So that's like going out to eat. Right? That's nothing. Um, but there at times people will hold and hold, and they'll be $1,000 down. Like you could take a small loss. Small losses are fine, but once you take that small loss, just try to figure out like why did you take that small loss or what caused the small loss. Um, that's probably going to be the best lesson I could share is reviewing the notes and figuring out like why did I create that loss. And I'm looking for the my email Virgin Galactic. Yeah, I bought $500 worth. It's only really lost $19. so like I can handle that. Right. Can handle $19. It was $500. I'll show you the email so you see what I'm talking about. Because Cash App is a little bit harder to navigate, but I said I'm going to figure it out. They don't do a whole lot of stuff, but it's still money that could be, that can influence your app, right? And sometimes you don't even have to think about it. I wish they had better ETFs or mutual funds on there, but at least it's something, right? Something that will give you an opportunity to get your feet wet into the market. That is easy to use. I just wish they had stop losses, and that would be a little bit better. But um, but I'm glad that you're taking it in and kind of this understanding, like what is going on um, in the market. But is there any stocks that you're looking at? Um, I know Angie. I know you mentioned earlier today about Sava. I guess that's kind of what in retrospect.
Yes. Well,
I
so, I think you went over it, right? Early,
Yeah,
not long ago.
yeah.
However, I'm still holding Plantar. Um, I'm losing right now, but I still
Yeah.
haven't connected um the next, I guess, I don't know. I still haven't made the connection between getting out, managing my risk, um, versus, like if I'm losing out on like, I don't know, five, 10, few dollars, part of me is like, oh, since I'm holding the option for a few months, which I think I shared specifically with Plantar, I'm holding it until January.
Mm.
So does it make sense to cut my losses and then get back into the game, or just let it ride?
Well, it depends. With PayPal, I would think not to sell that one, mainly because it's about to retest its previous high. I know it's kind of overbought right now, but it's squeezing. I would not. I've been waiting to actually buy into PayPal. So the mere fact that you're in it, just depending on where, when you bought contracts in PayPal, you bought shares,
Contracts.
contracts.
Hmm.
So depending on like when the expiration date is on the contract and what the delta is, and the implied volatility, because with the contract, that's the thing, right? When we're looking at contracts, we always want to look at the implied volatility. So on the right side panel, on this panel right here is the implied volatility. Uh, this prob OMT, I think is the probability of out the money. I'm not 100% sure on how to read this yet, because I know that the implied volatility is and the delta are the best indicators for options, right? They will say that others don't really matter, just the implied volatility and the delta that matters most. Um, so whether you're looking at implied volatility that's relatively low, like 29, right? Or one that's relatively high at 100, which is not the best, right? If you have a low volatility, especially in comparison to the others, then you should be fine. Um, Especially if it's not a weekly. I'm not a big fan of weekly contracts. I just feel like there's a little bit more that's taken from you when using the weekly. But when we're looking at these option contracts, we see, August, we see that the one that's one out in the money, the implied volatility is low. It's at 31. 31, it doesn't get higher until we get more out of the money. I think Sava is the reverse of that, actually. Um, the closer it is to in the money, the higher it gets. No, 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 I lied. So it wasn't you. So you see that the implied volatility gets higher as it goes further out of the money. Um, that's for Sava.
That's
Obviously,
interesting.
whoops, that's implied. I'm sorry, I'm looking at the wrong
Yeah,
one. Implied volatility is on this side. I'm sorry, I was looking at this one.
but it's basically says the same. Like, it's going up as it goes out of the money.
Correct, correct, correct. So it's going, it's 187, 182. one out of the money, and then it's just going, the implied volatility is going higher and higher and higher and higher. So typically when people buy out of the money, look at the implied volatility and see which contract has the lowest implied volatility in comparison to the other contracts, because that will be a real determining factor, on if you're buying a cheap contract versus not buying a cheap contract, because that implied volatility is what makes the contract more expensive, because it's the volatility is like the in and out, the liquidity of these contracts, and how whoever's trading or investing, how they are anticipating these movements. So that is what indicates if a stock price will go up or come back down. Um, I'm trying to think what else. Also the volume, right? If you have like for instance, if I were to look at the options for Saba for August, the ones that would stick out the most or the ones that have volume that's close to the amount of open interest, right? So, you know, none of these really have like, okay, I could say the 115 call has an option, has an open interest of 270. The volume is 184. That's relatively close. So I say, okay, but I want it where the volume outmatches the open interest. I want more volume than open interest, because that is like a short squeeze for options. A short squeeze for options is similar in that if you have a float size for a stock price, the float size is 4 million, and the stock is now trading 10 million, then you know that that's a squeeze. They're squeezing out all the shorts. This is kind of similar with options, that the more volume you have over the open interest, you're squeezing out, I want to say the open people who are interested in it, but you're definitely squeezing out the potential of puts being placed against that strike price, right? So the strike price 110, you don't, they have a lot of 110, they have more volume than open interest on the put side. So puts, they might be looking at 110 as a place of resistance and make sure that that price goes down, right? But that's the strongest one I've seen in the money. Out of the money, we see that 80 dollars the strike price. The volume is 633. The open interest is 174. So at 80, even though it's at $95, there are people that are looking to push this price down back to 80. And it's interesting that it's even 80 because I didn't know any of this. But remember what I said, the possible downside of this was like 80, I think it's at 87. Was it 87 or 80, like 89? So the mere fact that there was contracts that want to push the price down to 80 kind of confirms like this little red candlestick and what it could possibly do coming down. I'm not saying that it's going to come down on Monday, but I am saying that there are people that are betting against this stock, pushing it down, trying to push it down. Um, are there any questions? Did I answer? Hopefully I'm answering questions that, because I know with PayPal. Let's go back to PayPal. 'Cause I know with PayPal, yeah, it's one of those stocks that it's going to go up. No matter what it does, it's going to go up. Like, yeah, you probably didn't buy it when it was at its low, like back in May. It's going to go up. And once it breaks, and the only reason why I say it's going to go up because it's like a bank. Everyone uses PayPal. I'm a big fan of PayPal. I was a big fan of PayPal before I even got into the stock market. I always liked what they did with their credit rewards. Their rewards is amazing. Um, every time you pay a bill on your statement, you can damn near buy a flight. You can buy a flight wherever you want to go to with their rewards. So I think that PayPal is a hold on any pullbacks you buy. I know you got the options contract, so that might be a little bit um, more of a strain or a headache because you're like, I don't want to lose because you can lose a little bit more on the options versus the share price just because of the amount of movement that could happen. But I'm looking at the contracts and I'm like, okay, well, these are not, well, this is for August. These are not bad, right? I'm seeing the 370 calls. We got 204 volume for 24 open interest. Why is that? What's happening at 370? Something has to be happening there for these 204 investors to think that it can get to 370 by August 20th to be exact. Same thing with the 390 calls. 104, 72. Someone's thinking something. Let's see what their implied volatility looks like. We said 370 and 390. To 370, we see that the uh, implied volatility is 34, right? Really low. And then for 390, it's at 37. So these are, in comparison. And then we see, once we get to one out of the money, it's only at 31. But we see that the implied volatility goes up as you go further and further, deeper and deeper in the money, right? Which is kind of interesting. You would think that the implied volatility would start decreasing because it's already in the money, but you know, sometimes it's not like that. Uh, so that is something to definitely keep an eye on. And how much are the prices for this? Yeah, 51 cents, 55 cents, 26 and 29. This is out in August. So I don't know. I don't know if, maybe I'll wait for a little pullback because, like I said, it's slightly overbought now. And when it goes overbought, it doesn't stay there too long, right? It's like overbought, comes back. Overbought, comes back. Um, how deep does it come back? That's the next question. I don't know how deep it could come back, but when it's overbought, it doesn't stay there too long. But when it made the new high, of course, it made a new high, came back down. It was going to come to the 200 SMA price. That's what we expect. You expect it to come back towards the 200 SMA, but it also made support here. So at 232, that would have been a better price. I was over here looking at Boeing, thinking I would put money into Boeing, and I didn't put money into Boeing, but if I was really paying attention to PayPal, like I should have been, I would have got a better price in the 230s, maybe even 240s. Right. But Angie, I know you see, like, if you look at the technicals, you see that the MACD kind of crossed here, right? So we're seeing a change in momentum. See that the moving averages, they crossed here as well. Even if you got in at 250, it will be up about $50 a share. I'm not sure how on the contract. And then same here on the RSI, started to break up.
Mm-hmm. No. I was talking about Plantar, not PayPal.
Oh, my bad. Palantir.
Oh, Palantir.
My bad.
It's okay. No worries.
Palantir is a little different. It's not like PayPal. I'm not a big fan of Palantir.
Mm-hmm.
Um, Even though I know that cybersecurity for government agencies is going to be very, very important. And but that's the problem with Palantir. I shouldn't say I'm not a big fan. I do appreciate Palantir for being in the government and helping the government, but I also recognize that they are very limited in their investments. Their portfolios is more than 60% in government agencies, and we see that cybersecurity is affecting, other public companies. So you can't be, an agency that wants to deal with cybersecurity, but it's only working for the government, only unless there's something else that's happening. Microsoft, I know that they had a government contract and stuff like that. So I don't know how much that's playing into Palantir's stock price, but I
Mm-hmm.
do know that when it comes to cybersecurity, this will be a stock to at least watch to see if there's any more information
Mm-hmm.
on, to see what they say. I'm
Yeah.
looking at it right now, and I'm looking at $17 being support. So that's $6 of downside. It's trading below the 5 EMA price. It's trading below the 20 SMA price.
Mm-hmm.
Um, it still hasn't created a 200 SMA price, which is, I wouldn't say it's odd because it hasn't really even been around for a year. But
Mm-hmm.
it's trying, right? And it's trying. The only thing I can think of is that, you know, next leg down, $21, maybe $20.
Mm-hmm.
That's definitely $21. And then there's another leg down, then it'll be in the 17s and all, well, 18, or maybe 17. The only reason why I say leg down is because we see that there was a cross here in the momentum, the cross here in the moving averages. The RSI is still pulling down,
Yeah.
and the TTM squeeze is all red. Even though we got a green on the zero line here for the TTM squeeze, the stock price is still trading below the 5 EMA.
Mm-hmm.
So I cannot, with 100% certainty, suggest that the next day is going to be green, or even that it will come up to $24.
Yeah.
Yeah, because I would hope that it will hold above $25, but
But it
it seems like
hasn't.
it has difficulties even doing that.
Mm-hmm. Okay.
Yeah, but Palantir, like if they can really get their stuff together, then it'll be great. Um, we do the progressions, look at the 4 hour time frame. $45 was the previous high. So we're looking for supported prices here, like right around here at the $21 area. So I'm gonna do duplicate a line, put it there. Oop. Um, what did I just say? It was right around, I said $21, right? So somewhere around here. Um, the only reason why I say somewhere around here is because this price kind of tested it. It was resistance over here before it broke out. Um, on the 4 hour time frame, there's a 200 SMA price, but just not on the daily. Um, and it's still kind of trading below the 200 SMA price after it made its new high on the 4 hour. Now, only recently, back in late May, maybe mid May, yeah, late May, May 26th, it started trading above the 200 SMA price. So from $21 to about $26 before retracing, taking back that upside. But what is good is that on the RSI, it was oversold. So that's a good sign. And the MACD crossed on the 4 hour time frame. So this is also a good sign. TTM squeeze. See that the histograms are getting smaller, and the zero line is green. On the hour time frame, we see that once again, it's over. It's over the 200 SMA price, comes down, kind of holds this price. It's 21.96 price. It wants to stay at 22. Um, kind of wants to stay at 22. So if it breaks, let's say if we were to make a plan, right? Based off of prepare, we see that we have, first off, we're looking at the pattern price. The pattern is on phase one, and the price is at $23, right? So phase one is always like like at least a 10, right? And then also with that pattern price, but now we're looking at the candlesticks. So now we're looking at the candlesticks and seeing what the candlesticks could possibly like lead to. We see that there was 2 positive green days. And because there were 2 positive green days on the daily, that we can only hope for more upside. Excuse me. But once again, we're on the hour time frame. The hour time frame says that the upside resistance is $25. It's trading at 23.20 now. So that $2 of upside, if it's filled, because it's not overbought yet on the hour, if it's filled and crosses over, then we'll be okay. But also on the hour time frame, it shows that all the momentum is slowed down. The momentum, the squeeze has slowed down, so it should be turning bearish. Should be, right? As each histogram got smaller and smaller and smaller. So I would anticipate a histogram below the zero line, possibly causing this to come down to $22. But if it comes down to $22 and holds support, now we're talking a whole new game, because now that means that it can continue to trade sideways. And a lot of times when a stock trades sideways from phase one, because you still think of it from Wyckoff, right? This was all phase two. This was kind of phase three. And then this is phase four. And if it holds support, then it can continue to be phase one. And then at phase one, that's when we start thinking about, okay, pattern price. All right, phase one, we'll give it a 10. The candlesticks is starting to retest 25. All right, maybe give it a 15. All right. The only thing that I'll give a 20 on pattern price is a bullish engulfing candlestick pattern, where you have 2 green candlesticks engulfing a red candlestick, going on the upside above the 200 SMA price, because nothing is 100%. With this. And then on the intraday, the 2-minute 5 days, you see that it not only did it made a new low, but what was the previous high? Previous high, 25.34 still. Previous high, it tried testing it. See, even though it didn't make a new high, pulled back. Still pulled back. Right? Even though it was going up, it pulled back, went below the 200 SMA price. So that's what I'm saying. Sometimes you have a stock that'll open up, and we need to identify where that previous intraday high is. Because if we want to know if a stock is going to make any type of movement intraday, then we want to know what that previous high was, so that if we get in the position today, that we're not getting stuck and then holding the bag as it continues to drop lower. Because we see it did this before 11. It started to pull back before 11, right before lunch, and then continue to pull back into the next day. And then once this next day happened and hit a low, it started to trade above the 200 SMA price, but now it's just fighting uphill resistance. And it's going to fight that resistance for a little while. That 23.77 looks like a strong resistance point. Even 23.40 looks even stronger. Actually, 23.40 is the stronger one, because it tested it once and then twice. And then this looked like it wanted to at 23.30 and was like, nope, and it came down. So I hope that makes sense.
It does. Thank you so much.
Absolutely. Absolutely. You know, that part is important.